Since the company was founded, Uber has been consistently unprofitable, building up losses of over $30 billion. That all changed this month as the company reported its first ever operating profit of $326 million. And that progress has pushed Uber's stock price up 77% year to date. Looking at the latest share price, the company is now valued at $90 billion. It's got $8.5 billion of cash on the balance sheet, $7.5 billion of investments, and $9.3 billion of long-term debt, so the enterprise value is $83 billion. Gross bookings in the latest quarter were up 18% year over year to $34 billion, and total revenue increased by 14% to $9.2 billion. Adjusted ebitda more than doubled to $916 million, and free cash flow climbed to $1.1 billion. That means Uber has now delivered more than $1.7 billion of free cash flow over the last 12 months. In fact, this was a hugely impressive quarter from Uber. Number of trips on the platform, gross bookings, number of active drivers, adjusted ebitda, and monthly platform users all hit record highs. The only disappointment was Uber's freight segment, which saw a 30% decrease in revenue due to falling demand for goods, but this weakness was more than offset by Uber's other segments. Uber's delivery bookings, for example, grew 14%, and the company announced a partnership with Domino's to make the pizza chain exclusively available on Uber Eats. Not only does this boost revenue, it highlights the value that restaurants get from being on Uber's network. With Uber in such a dominant position, the biggest risk may be its supply of drivers. With unemployment low, Uber needs to keep its drivers happy or risk losing them. Then again, Uber is also working with Google's Waymo to power autonomous driving. And as more and more people use Uber services, the company gets more and more valuable data that it can use to improve its business. Looking ahead, the company still has a long runway for growth. Markets like Latin America and Asia Pacific contribute less than 20% of revenue, and in Uber's major markets, less than 10% of the population use Uber on a weekly basis. According to the CEO, Uber's base business should be equipped to grow at a double-digit rate, with so-called growth bets on top of that, which include products such as Uber for Business and Uber for Health that can boost the business even further. So let's assume Uber can grow revenues at 15% per year for the next 5 years and then deliver an operating margin of 10%. In that scenario, Uber would be generating $70 billion in revenue in 5 years' time and $7 billion of operating income. A 25 times multiple takes the valuation to $175 billion in 5 years' time, and that works out to an investment return of 14.2% a year. It's an ambitious target, but Uber is an impressive business with many options for growth. That's why I give the stock a bullish rating, but these are my personal opinions, not financial advice, and I do own shares in Uber. For more detailed investing ideas, make sure to visit our website overlookedalpha.com.